Welcome to the February 2022 Markets Update. My name is Mathew Cassidy, Managing Director. I'm joined today with our Chief Investment Officer, Graeme Bibby. Welcome, Graeme.
Hello, all.
What we'd like to really run through today is giving consideration to the macro issues we're seeing in markets at the moment. Also give consideration to how that's actually playing out in markets and how we're positioning portfolios at the current period of time. Graeme, geopolitical issues at the moment. What are we seeing?
Well, I think the one that's front and centre is Russia and Ukraine. So with 100,000 troops on the border and warnings of imminent invasion, that's really in the centre of investors' minds, and it has impact. So many things don't. This does, where there's oil pipelines, there's a lot of markets close by. It has a big deal for markets, and we've seen that in oil prices. But recently we've seen a backing off, so maybe the invasion doesn't happen.
Yeah. Obviously, another really big issue for this year, all over the papers, inflation. What are we seeing this year, both internationally and domestically?
It's been a really interesting divergence between the US and Australia. We've seen both countries have surging inflation, but Australia to a much lesser degree. And a lot of it's due to things that have happened in the US, where they've had their pandemic experience was a lot worse than ours, and a lot of people have disengaged from the workforce because they had to, either through they had money to basically sit at home instead of doing their waitering job, or that they've basically had to care for family members because of the much more severe COVID situation there. So that's been a big deal.
Yes. And with a large number of our clients having property exposure, interest rates is obviously a key topic. The cost of money in the market. How are you seeing that playing out in Australia?
Yeah, well, a lot of it's already been priced in, and we expect some pressure on interest rates to continue for a while. But we may well be talking about falling interest rates by the end of the year, and that's an unusual thing, a non-consensus. But we may also see a peak of inflation, which will be related to that. So I think right now, a lot of that inflation has been priced in, and interest rates hence have moved up quite a bit already. But we expect still some volatility in interest rates as these different scenarios, geopolitics, pandemic recovery versus a slowing economy, plays out.
Yes. And markets, the first 6 weeks of 2022 have certainly showed a fair degree of volatility. How do we see 2022 playing out, and is it a call that we should sit on the sidelines and be out of equities that have been very volatile over this period?
It's definitely a different environment where the Federal Reserve and the Reserve Bank, particularly the Federal Reserve, has priced forward a lot of the things that it was going to do and brought forward their action and their rhetoric. The Reserve Banks had to sort of draw back from 2024 first interest rate hike to maybe 2023 or later this year. So that's been priced into markets. But a lot of it was really around that concern around a change of monetary policy plus fiscal policy. All the support that was there, the dramatic support and stimulus in 2020 and 2021 are now being withdrawn, and that's concerning markets and equity markets.
Yes. How do we position portfolios in this current environment? Do we need to make any substantial changes? Do we need to think about things looking differently, and what conversations should our clients be having with our advisors?
Well, I think the main thing is that it's going to be more volatile. Therefore, we need to take a risk management focus. So we will make some adjustments at the edges, and there'll be times to take advantage of the opportunities as well. So we think that there's areas that will be sold off that can be opportunistic to buy into, investment styles such as value that's going to outperform for a little while here. But we think that quality and growth will reassert themselves, and it's certainly not a time to be completely go to cash. A lot of people panic. We think that you should have a measured approach and have a risk management approach.
Yeah. What about if you actually have some cash at the moment? Is now the time to think about deploying that, or should we be thinking about what we call a dollar cost average strategy, putting some money in at certain times during the year?
I think it's prudent to not try and pick the absolute bottom and this is exactly the date. So dollar cost averaging does work, particularly when you get valuations better. So, averaging over a few of the dips, if you've got money on the sidelines, is certainly a good way to go, because you can pick up stocks at very, very good valuations that maybe you haven't been able to pick up for a number of years.
Yeah. Thank you very much for joining us for the February 22 Markets Update. We look forward to bringing you all the latest issues we're seeing in markets, macro issues and the economy, and we'll look forward to sharing those with you through hopefully another very interesting 2022. Thank you very much.
Thank you.